perfect.
Mm-hmm.
You know?
Yeah.
Are we recording yet? Because all the good shit's going already so far. Back up.
I just started recording.
You need to shut up.
Then let's start it off. Welcome to another episode of Get Real with Liz, and today I have special people here. Somebody I've known for a long time, and his partner. Can you please formally introduce yourself, and tell us who you are and what you do?
Gabriel Fernandez with Next Home Realty and Novel Home Loans. Been around for about 30 years doing mortgages and probably about 10 years doing real estate. But if you've done mortgages, you've pretty much done real estate. So 30 years in the business. I know Elizabeth for, who we were just talking about, 20 years, man.
I
Time's
know,
gone
it's
by.
crazy.
She used to work for me.
No, you're supposed to say only 2 years. I'm young.
They're going to start doing math, huh? But the good thing, and I've seen her evolve too, which is awesome, and it makes me proud that I could have been part of your growth, you know?
Yeah, actually, you guys were part of a life-changing point in my life. So
yeah, we kind of plugged you in, and then you kind of took over, you know. And it's been a tribulation from that time to this time, just because in that 20-year span, if you think about it, it's changed a lot, you know.
Oh yeah, for sure.
Let's introduce Nick.
Nick.
Hey, I'm Nick. I'm Gabriel's son. I'm a realtor and mortgage lender with Next Home Novel Real Estate and Novel Home Loans. And I've known Elizabeth for probably the last maybe 8 years or so. And I must have been about 7 years old when we met.
Right.
Maybe.
Cuando todavía estaba en pañales.
Yeah. So I work closely with my dad, Gabriel, and we've been working together to not only grow our real estate company, but also our lending side. And we work very closely together. And one of the things that we're doing a lot of the time is just helping people understand their financial situation and where they are with real estate. And one of the biggest impacts that I think we've had is that we've helped various types of clients, self-employed people, first-time home buyers. We've helped with down payment assistance programs, and we've also really helped large families and small families build generational wealth over time. And that's one of the things that we take pride in doing, and that's what real estate's all about. It's all about helping people.
Exactly. Providing a service.
Yes. Oh, absolutely. And not just that, it's, you're saying generational wealth. Mm-hmm. A lot of people hadn't looked at it that way. You know, like you go back 5-6 years, they never looked at it that way. And it's about creating wealth. Real estate is not just, I'm going to buy me a house, pay it off in 30 years, and that's where I'm going to live and die.
Right.
No, people are looking at it as an investment opportunity.
Oh, yeah.
And
people options.
Options. And options. Let's rent this out. Let's do, now with the new ADUs, you can be able to get some cash and build 2 other units. You can turn in your single family residence basically into a triplex. Mm-hmm. And generate another $60,000 to $70,000 a year,
right? And residual income.
Shit, if you're not doing backflips right now, come on,
right? Tell them out there.
I know, well, it's there. All they got to do is DM us or call us or whatever. But we got all the tricks, to make more money if you want to do the, like Nick saying, generation.
Wealth. And the opportunities are there. Unfortunately, there's a lot of people within our Hispanic community that are afraid to ask those questions because they've never, they grew up in families that they never did this. They never bought a house. They don't know that information. So they have friends and family that they're like, unless you have excellent credit, you can't buy. Unless you have $50,000 down, you can't buy. You were talking about down payment assistance,
And that's one of the things is I just spoke to somebody today she's actually selling her home.
Oh, wow.
And she goes, don't I need 20%? And I go, no, you don't need 20%. Right. And we're getting you into your next home. You could do as little as 5% down if you qualified for it. In her case, she needed to do a minimum of about 30%, but that's because of her income limits of qualifying. It's just her. She's a single woman. So with that first-time homebuyer program, we have quite a few. Everybody knows mostly about the CalHAFA down payment assistance programs.
Right.
And they cover the 3.5% or the 5% down that you're coming in with. And maybe they'll cover some of your closing costs. But we have other lenders. We're a broker, so we can price out your loan with various lenders. And one of the lenders that we used, has a down payment assistance program that allows non-occupant co-borrowers.
Oh, wow.
That allows your credit to be lower than 650. They also allow for one of your co-signers to have owned a home before. So the first-time home buyer programs that are available, if you're looking at a unique situation where you need multiple co-signers, we have those programs available. So, for example, that program that we got that person plugged into, they didn't have the money for the down payment. We got that covered. She partnered up with a really good real estate agent. And I think that's very important because they negotiated $15,000 in credits to that buyer. So her bottom line when I initially quoted her for the loan was $1,650
Right.
to purchase her first home.
Wow.
And that
And
was
then now
crazy.
it's like a credit, right?
Oh yeah, now it's a credit of like $4 or $5 grand.
That's crazy.
And so now she's getting money,
Right.
So that's something that's really cool to consider. And it also depends on when you buy a home, what those closing costs are going to look like.
Right.
Because you could be looking, if you buy later in the year, you could be looking at maybe 14 to 15 grand, maybe more. But then also depending on other factors, you could be as high as 20, 25,000, sometimes 30, 40 grand for closing costs.
Right.
So it really depends on a lot of factors, but I don't think
And that's
people
important
know.
that you said that about the closing costs fluctuating throughout the year. Can you explain a little bit more? Like obviously I know, right? It can be the property taxes depending on when they're due. But can you explain that so that they can understand?
Yeah, I think one of the biggest factors that people don't understand is, let's take your sales price or your loan amount that you're applying for. That's a factor. That factor is maybe 0.5% in title and escrow fees. Take 0.5% of that amount, and that's what your title and escrow fees are going to cost. But then in addition to that, you're looking at the loan originator's fees,
Right.
The bank's fees. You're looking at buy down for maybe the rate. And then also there's going to be your prorations, which is
Right.
going to be your taxes and insurance. And typically those can fluctuate. So they can collect as little as 3 months, but as high as 8 or 9 months.
Right.
And we've seen that change people's minds of when they decide to purchase.
And what's included in the impounds, Nick?
In the impounds, you're going to have your property taxes, your insurance, and then you're also going to have, if you have an HOA, you're going to have those HOA dues.
And then we had an increase already because our insurance commissioner is an idiot. So he's actually not working with any of the insurance companies, so they're not selling insurance for home insurance in California anymore. So now you're paying a big premium on that,
Right.
And you get impound for that. That's also causing a little issue. You need to come in with more of part of the closing costs.
Right.
Problem
And not only
there.
that, but also fireplace. Like if there's a property close to like fire hazard, now you have to do the Fair Act or whatever.
Right.
The Fair.
Right. You'll get denied.
Yeah.
You have to get the Fair Act, the state good plan, and that's $1,500. I mean, more like 25.
I actually seen higher than that, like $4,000 or $5,000. I'm like, oh my gosh, for the year, it's
absolutely right on
crazy.
that. It's crazy. That's nuts.
It's just crazy. But the opportunities are still there, guys. So
Yeah, don't let that discourage you, man.
Yeah, we don't want to discourage you, but the deal is
it's being realistic. We're real, and there's opportunities. So, and you have to have the right team.
Right.
Like what Nick was saying, make sure that you have a good lender, somebody that's with experience and knows the market, that can switch, options in case scenarios come up.
Right.
And then also a good real estate agent that's going to be able to negotiate, for you. Gabriel, you've been in the business for a long time. You started with Capital Mortgage Services, which, it came out of my memories, my little business card. But, now you have another company, you've changed, you adapted to change.
Absolutely.
How has it been, being in the business for 30 years? What changes have you seen that are?
You always have to be evolving if you're in the mortgage or real estate business, because everything's changing. Everything's changing. Obviously, when I started, I did my first loan in 1996.
Oh, wow.
That compared to now, it's total difference. But the opportunity is still there. The opportunity is there for clients right now, obviously. But also, if you were looking at being a new agent or you were thinking about coming to work in this industry, it's always changing. It's awesome, and it's a very good business to be in, because you're helping people, obviously. So there's always opportunity. There's always opportunity, but it's a roller coaster. It's definitely a roller coaster. You got to understand. I think the longer you stay in it, you don't quit. You know, we got a lot of quitters in this business, from real estate agents to loan officers, a bunch of quitters.
Right.
But the people that stick it out, they understand how to change as time changes. Before, you didn't really need a license to do loans. Now you do.
Right.
You know, and you need education every single year. But that's good. It weeds out all the dirt bags that were never supposed to be in the business.
Right.
You know,
Right.
and then it just creates better credibility for your clients and accountability for your clients.
Which is important.
Which is super important,
Yeah.
of course, you know, because you got to guide these people. You know, they've never bought a house. You got to
Right.
be able to lead them in the right way. And, you know, as a lender, you guys always got to remember, you're the one that closes the escrow. They don't give you enough credit. Well, some of these real estate agents don't give you the credit.
Right.
So
I know. I've been doing loans and real estate, and sometimes people have a misconception. There's a lot of realtors that have a misconception on loans. They have a lot of misconception on the actual behind the scenes that the loan officers do. And I'm like, no, like, why isn't this loan getting done? There's a lot of factors. There's debt to income ratio, DTI, LTVs, CLTV, and they're like, what is that? Because they don't know, you know?
They don't know. And
No.
I'm surprised. I mean, I went to the MLS.
Right.
And I sat down during Robert Tolan. He did his VA seminar,
Right.
and he's very well versed on the VA stuff. And I went by just to see, you know, maybe I don't know some things about VA. Maybe
Right.
maybe there's something new I can learn.
Right.
And the whole time I was nodding my head. I was like, yes, okay, yeah, that makes sense. I know that. I've been in that situation before. Or, you know, we've done VA loans, and so, you know, I'm listening to kind of what's going on there, and then the questions that came up from very seasoned agents. I mean, these agents had been in the business for 20 plus years, and they were asking questions that I couldn't believe.
Right.
And I was like, whoa, like the light went on for me of how valuable it is to work with an agent that is well versed in both loans and real estate. And
Right.
that's kind of one of the things that sets certain agents apart,
Right.
but then also certain companies apart. Like
Right.
we do both loans and real estate in our office. So that value factor that we have a leg up on our competition. And, you know, I've talked to other agents where they say, I tell the agent or the lender to stay in their lane and I stay in my lane. No.
We're a team.
We're a team.
We're a team. I always say that all the time.
It's a team effort. How are we going to get anywhere if
Exactly.
we don't work
you
together?
guys are spoiled, because all of us, we're all spoiled. We all came in the lending side.
Right,
And
right.
then we evolved to
real estate.
To real estate. But then you're so right about that, because you can't separate it.
No.
It works together. When it works together, it closes a lot
Oh
faster.
yeah.
A lot
Communication is very important, and we're supposed to be a team. You know, it's like if you're asking for bank statements and the client hasn't reached back to you, but I'm meeting with them to go do an inspection, it's my opportunity to be like, hey, don't forget to send them the bank statements, you know, or vice versa. You know, it's all about the teamwork.
Yeah.
Teamwork is the key.
Teamwork makes the dream work. And
That's right.
I think Gabriel's been working a lot with a lot of self-employed people. I think that's your main.
Yeah, that's been kind of my niche lately.
Yeah, remember we were talking about that at the country club that I was telling you, like, hey, we need to focus on these small mom and dad pop shops. Mom and pop shops.
Yeah.
You got it.
Because they are hardworking people. They make good money. But at the same time, they're trying to save money because, you know, they don't want to give their money away to the IRS. So therefore, they take losses, but they do have a good monthly revenue. So unfortunately, when they're trying to get into a regular, you know, traditional, conventional or FHA loan, then they don't qualify. But it's very important that you know, as a lender, can talk to these people and say, hey, okay, maybe you don't qualify for that one, but there's
other programs.
Other programs, bank statement loans. You know, I don't know. Name some.
Yeah, no, absolutely, no, 100%. There's other programs that have came out in the last 6-7 years that are tailored just for self-employed people. You know, you can use your deposits, 100% of your deposits, to qualify for a mortgage.
Right.
That's awesome.
That's amazing. Yeah.
And you could do that. That's an option. You could do 1099s. If you're a truck driver and all your forms for your taxes are 1099s, I can use them all.
Wow.
You know, you can do P&Ls. You can go to your tax preparer, your CPA, and they can give you a P&L what you're making, and you can use that as income. So there's a lot of options because all the self-employed people they got cash.
Oh yeah, they do.
Either mattress money or they got it in the bank, and they got cash. They're just not reporting everything at the end of the year.
Yeah, correct.
Because they don't want to pay taxes.
And then and there's pros and cons to that, right? So the pros are you have that opportunity. Right. You have the opportunity to buy your house. The cons, you might have a little bit of a higher rate, but the opportunity is still there.
Yeah. And I think, can you highlight the importance of talking to a lender like yourself before filing your taxes?
Oh yeah.
Oh
that's
yeah.
Huge.
That's a huge one
That's
for sure.
Huge. So don't do your taxes
yet until
you talk to your lender.
That's right.
Let me tell you why. Because you're gonna
say it louder.
Yeah. Because you're gonna write off everything and to show you made $5.
Right.
Maybe you don't want to write everything off, and maybe this time you want to report a little bit more money. Right. And maybe you qualify for a home, but you need to go see a lender to find out what it's going to take to qualify for a home for your area. So that's super, super important. People come in, hey, I did my taxes, I'm ready to go.
You're like, no.
Yeah, no, what'd you do? And there's other things inside of your taxes that we can use as income. You got your regular income you reported, but you also got depreciation. Depreciation could be something that we can use as income. I'm going to give you an example. I have a client of mine that reported $5,000 as income. Well, that ain't going to buy you nothing, not even a hot dog down the street. But he had $250,000 of depreciation because he bought tractors. They cost him $250,000, and I use that. And because they're self-employed, I can use 1 year tax return. I don't need to see two.
Oh, wow.
And that's 5% down.
That's amazing.
That's phenomenal. Yeah. That's a phenomenal.
You're getting a regular loan.
Yeah.
Yeah, and you're getting a regular loan. You're not getting no DSCR or anything funky like that. You're getting a straight up, with the lowest rate possible.
Wow.
Which is awesome.
That's actually pretty good. I didn't know about the depreciation.
Yeah, depreciation is huge. And people don't know that.
See, you learn something new every day.
Yeah,
you learn something new every day.
If we came in this studio thinking that we knew everything,
right? Nobody knows everything.
Real estate and loans,
and we're always learning.
We're always learning. We're always learning from each other.
That's why I love to be busy. When I'm busy,
you learn more.
Oh, you learn. Well, yeah, I do because you work with all the different clients and different options and.
Every scenario is different. I always tell everybody, it doesn't matter how cookie cut that deal is. Yeah. There's always something.
Yeah.
The cookie cutter deal, sometimes you're kind of surprised you even got a deal like that.
I know, right?
You do. You kind of set back.
I know nowadays.
It's like somebody didn't pitch a curveball at you. They just throw a straight ball there at about 50 miles an hour. Easy to hit.
Yeah, and I think too, like when we're working together with our lending side. It's funny because I'll get scenarios that maybe he hasn't seen in 10 years, right? Or even my sister Angelica, she's the processor there. You guys work together.
Shout out to Angelica.
Yeah, she's been there. She's well, I shouldn't give out her age, but she's been with me that's all she knows is processing.
Right.
Yeah.
Well, when I started, she was helping.
Yeah. So that's all she knows, and this is, I think she's going on 20 years. She's going on 20 years. Nice. That's all she knows. She's probably and that's just because she's my daughter. She's the best processor there is, period, right now.
Yeah, we get calls.
She's really good.
We get calls.
And she learned from the best.
Yeah, we get calls from banks, and they're like, hey, they're asking us questions about our business or whatever, and then they ask us if we do contract processing out, somewhere else. And we say, no, everything's in-house. And then after they talk to Angelica or Laura and they see how clean the files are when they come in, how they scrub the file, they're giving us compliments. They're like, you have the best processing in the nation. We got a call from United Wholesale Mortgage, and they were like, "You have the best."
Right. No, and honestly, like, not to be bragging or anything, but one thing that I am grateful for you and Gabriel and Furman is that you guys did teach us how to structure our loans properly. You know, we had control over everything. So we did everything from scratch, like opening escrow, ordering appraisal, the paperwork, lining them up, and everything, so that it went to the processor underwriting, clean all the time. 100%. And then I went into Bank of America, no offense, but it was a cluster chaos. You would send...
most banks are. Not
I had no control over my file. The processor was in the East Coast, the underwriters on the Central Coast, and it's just like nobody had any information on what was going on with my deal. It was frustrating.
Yeah, and it's even frustrating to get new processors and to get them at the caliber that I think a lot of people are at, and there's not too many people out there that can really show their value in that way. Right. And there's not a lot of lenders who can show their value in that way because they have things outsourcing on kind of every level. But I think it's really cool because when we end up working together, whether I'm the realtor, he's the lender, or whoever's the lender, like when we're working together, we're seeing some scenarios come up that we haven't seen in a long time. And it's like, it's such a good refresher. And that's why it's so important to just keep working and working. And then see, when you sit down with a client, tell me not, but it's a discovery process. I think so many of them think that they're I'm signing my life away. I'm not ready to buy a house right now. Of course you're not. I know you're not ready to buy a house.
Well, it's kind of like when you go and buy a car, right? So I used to sell cars. That's where Furman got me from the car business into the lending business. But somebody walks into the lot and they're like, "Oh, we're just looking," that's automatic response from a client. The same thing when somebody comes to you, "Oh, we're just asking, like we just want to see." But in the back of their mind, they've been thinking about it, so they are ready mentally, not so much, but they know that they are.
And I think the biggest problem with people is they don't want to make a move to find out where they stand at with the loan officer. They almost think that we're going to sell them something,
right?
And we're not. We're more like a financial planner,
right?
We want to see where you're at financially, if you're ready to buy or if you're not. You don't have to buy,
right?
But you need to sit down with a real estate agent, with a lender, to find out where you stand at, how much money you make, what kind of house can you buy or be qualified for based off of the income you make. Do you have a down payment? You don't. Well, we can help you with that. So you have to sit down, and you need to put us in your phone there as your agent. Right? If you have questions regarding mortgage,
because everything changes, and like you said, it's important for them to show up and ask you where you stand right now. Because if for whatever reason they don't qualify right now, then you guys can come up with a master come up with a master plan so that eventually they could get there.
Exactly. You might not be ready 6 months.
Right.
The one that really kills everybody from ever buying is the guy that thinks he's got bad credit and it's already been freaking 15 years.
Right.
Oh yeah, I didn't pay this dentist bill, this cable bill when I was with my buddies and we rented this place.
And it doesn't even show up in the credit.
It doesn't even show up anymore, and you got bad credit. Yeah, I had bad credit. When was that? Oh, that was in 1972. Oh, come on. You haven't bought a home because of that?
Yeah.
You're missing opportunities.
You're missing opportunity. You missed the whole barco, the ocean.
Yeah.
Missed the ocean, man.
Missed the ocean, bro.
For real.
But the deal is I've had people like that.
Right.
Or they think, oh, no, my FICO score, last time I checked was, 500, It's like, come on. It's you got to check your credit at least once a year. Do a full-blown tri-merger credit report, not a karma or whatever you get from the bank. It's a full-blown credit report.
Right.
And you get that has your whole soap opera on there. They'll know everything about you, but you'll know exactly what your FICO is.
Yeah.
Then if your FICO scores are low for whatever reason, well, guess what we can do? We can put you back in the system and they'll tell us exactly what you need to do to get your FICOs where they need to be at. You're not going to guess anymore. Those days are over. Oh, well, maybe I should repair my credit. Well, there's no such thing as repairing credit. You already screwed it up, right?
It can't get any worse than that.
It can't get any worse, buddy. And
it can only get better.
And what we're going to do, we put you through another electronic system, and it tells me exactly what needs to happen. So you can go from a 400 FICO, whatever you're at, maybe to 700 FICO, but I'll tell you exactly what you need to do. It's called a what-if scenario. So you're not guessing. So that's where a lot of people kind of goof up. You need to talk to us. So you're looking at buying or, not ready till next week or next month or next year, you still need to sit down with us and get a game plan going.
I really emphasize that a lot to all of my clients because it is important. It's like getting on the freeway and you don't know where the hell you're going. Yeah. It's like, okay, well, where are you going to go? I don't know. I'm just on it. Exactly. No, you need to know where you stand right now. And then who knows, you might qualify right now. Congratulations, but maybe you don't. And if you don't, let's find out what it is. Because it can be something so simple as paying down a credit card. Because a lot of people have a misconception where they think, oh, I have excellent credit because they're in debt. No, it doesn't work that way. Just because you have a bunch of credit cards doesn't mean you have excellent credit. No. It's actually affecting you.
I'm building credit, so that's why I bought 5 cars.
Right.
Oops. Right. Those are $800 a piece.
Right. Yeah. And now talking about that, the $500 a piece car payments, can you please explain to the clients why it is important not to get in debt?
That's another problem. Most people go get a car, like I was saying, $500 a month. That's the worst.
I've seen $1,500 a month on one car.
Yeah, I seen a McDonald's kid that had a $1,200 payment a month on an Escalade. Well, anyway, that was one of my clients. What are you doing? But anyways, I think he made like $1,800. But the deal is you want to be able to manage your credit cards properly.
Right.
Meaning that you want to pay them off at the end of the month. You want to be able to use them just for your immediate stuff that you have, gas, food, and just pay them off at the end of the month. If you do that with your credit cards, you're going to have 700, 800 FICO scores. Car payments, sometimes you need a car. You can't do anything about it. Go ahead and get a car. But before you do that, maybe you want to come and see us and look at your whole financial situation, see what you qualify for, and see how that $500 or $800 payment is going to affect your ability to get a home, And maybe you might want to wait till you get your home and then buy the car. You know?
Right. I always kind of give everybody a scenario of like for every $50 in payments, about $10,000 in purchasing power that you're missing out on. So on a $300, that's $60,000.
Yeah.
$500 to $100,000. It's like, that's a big difference.
Yeah.
Because if you qualify for $500 and you ended up deciding to go buy that car payment for $500, you could have technically qualified for $600, but now you don't.
Yeah, and that's so important because I think the other thing with tapping into the self-employed people again, if they own a car but they use it for their business, that's something that you don't have to hit them for.
Oh, that's true. You were mentioning that the other day.
And I think
that's for your self-employed people.
Yeah, and that if it's there and if it's showing on the taxes, those are all really valuable things that people don't know. So, and you don't know that until you sit down with somebody. Right. And that's the bottom line: is you need to sit down with somebody to know what you don't know about buying a home. And TikTok ain't gonna fix that.
No.
Instagram ain't gonna fix that. No. There's no outlets out
dancing
there.
Isn't it?
Yeah. If you're following that dancing realtor, you need to unfollow them quick because they probably don't know nothing about loans. But sit down with somebody, your local realtor, your local lender, somebody, if they're just a drive away, go check them out. Or even if they're somebody family member or whatever, feel them out for what they know, because there might be something that's not happening that you're missing out on. I had somebody who we got into into contract. We were in escrow, and what ended up happening was the underwriter was really scrutinizing their file because of their debt to income ratio. And they were like, hey, we don't think this is going to work out, whatever. And I was like brainstorming, what the heck am I going to do?
Right.
How am I going to get these guys closed? Like we almost released, we were about to release our contingencies. And so we got to the end and it was like 2 weeks before closing. And I called her and I was like, hey, I found a solution. So
there's solutions to every problem.
There's solutions to every problem as long as you can get in there. Right. And with her situation, she had a car payment that had probably, I think, a $500 to $600 payment, but her balance was really low. It was
less than a year.
It was less than a year, but for whatever reason, the underwriter said you can't omit that.
Oh, wow.
Because her percentage of her payment versus her income didn't match up. It was something weird. So I was like, okay, what are we going to do? So what we ended up doing was I had her reach out to her lender and modify her loan on that car. And that brought her payment down like $350.
No way.
So she went from a $500 payment to like $150 payment.
Oh, wow.
And I was like, I had no idea. But they said, hey, we need like a $2,000 fee or something like that to bring that balance down. And that was a trick I didn't know that I was able to get, but
now I know too.
I know. Yeah. So that was something that changed everything for her. And then I ended up finding out that they actually qualified, their ratios were so low that they qualified for even more after that. And so that was something I didn't figure out until the middle of the process or towards the end of the process. But, you know, she told me, she was like, thank you so much for doing that, because now I'm not stressed out about that payment that I got qualified for.
So not only did they qualify for their loan, but now their car payment went lower. So
absolutely. So it's called a recast. You recast your you recast your balance of your vehicle. So sometimes we'll have you do that. So now you know one of the tricks.
Right.
You
That's
know,
amazing.
somebody that doesn't qualify, well, once you recast your your actual car payment, and you'll qualify for more.
Yeah, but don't call your tia. Call us, because we know it.
Yeah, don't call Uncle Bob or Tia Chana
or the neighbor, or the friend.
Mortgage and real estate consulting.
And that's funny you said it, because that's so true. Like, a lot of my clients are like, oh, well, the neighbor just told me that, you know, I would never qualify because unless I have $50,000 down, I won't be able to buy. Or, oh, I can't qualify unless I have over 700 credit score.
So misinformed.
And
things change. Things change from 1 month to the next.
But believe it or not, people are still saying that, and people are believing it. And every time I'm like, hello, no, reach out to us. Ask us first, and I'll tell you whether you qualify or not.
Yeah, you gotta talk to the right people.
Yeah. And then the other thing is, you know, pretty much everybody qualifies, you know, but for how much? Obviously, you know, we live in a city, or what's it called, counties, you know, San Luis Obispo and Santa Barbara counties that are a little bit more expensive in price versus, you know, inland like Bakersfield or Fresno or whatever. But you still qualify, just for how much. And then that's where, like, again, here comes the lenders, where you guys can dissect, you know, you guys are dissecting and figuring out how you can bring that purchasing power up.
Yeah.
You know,
Absolutely.
What are some of the trends that you're seeing, Elizabeth, with like, you know, sometimes you're working on the Central Coast, but sometimes you're in these pockets, right? Sometimes you're in Paso. I've seen you be in Paso for 6 months, and then you're in Santa Maria for
Salinas, and then Monterey,
you know, you're in different areas, and so it's cool that it's not out of the box for us to say that your realtor can work 2 or 3 counties, because really everything's about a 45 to an hour drive from
Actually, I've worked 4 counties. So I've done San Luis Obispo, Santa Barbara, Kern County, and Monterey County.
Oh, wow.
There you go.
You know,
and with that, you know, I was recently doing a closing in Paso. At the beginning of the month, we closed on a loan, and I was able to negotiate $175,000 off the asking price of the property. And that was in Paso, and that's kind of unheard of in Santa Maria area, or Napomo or Arroyo Grande. So what kind of trends are you seeing across the board?
Honestly, the most important thing is price, right? So pricing the property correctly is the number one thing. So if you overprice a property, it's going to sit on the market longer, and then the longer it stays there, you're going to be chasing the market. So now you're going to be doing price reductions. You're going to be taking any offer at this point, and because they need to sell. Now, if you price it right, or you underprice it a little bit, you don't want to underprice it like ridiculous either, because then they're going to like, what's wrong with it? What's wrong with it? A foundation cracked, or what are they trying to hide, or whatever. But as long as you price it right, or a little bit under, you have that momentum. And not only that, but it also has to be very important, like the medium price range. Like, for example, Santa Maria, we know that everything within the 500, 600 is going to sell. There's a lot of turnover in Santa Maria.
Likely over.
Yeah, and over. Lately, it's been way over. I'm like, damn, what's going on with Santa Maria? You know, so
10 to 20 offers.
Right. 10, 15, you know, over asking. I'm just going to give you a little scenario. A couple of weeks ago, we wrote up an offer on a property in Santa Maria. They had a price way under, which, you know, we knew the strategy or whatever. So I knew my market. I was like, okay, the highest property sold here for $635. We're going to go with $640. We went our max, right? Not our max, but the market's max. You know, we don't want to be over exaggerating either. And supposedly we're kind of like up in the running. And then they said multiple counter because there's 10 offers, right? And the multiple counter, we stayed firm in our price, but we waived some contingencies and whatnot. And then they come back and they're like, oh, somebody beat you guys with another. So we went at 60. So now somebody went in at 100,000 over. And we're like, wait, what? There's no way the house is going to price for 680. But I don't know, you know, nowadays I don't even know what to think now. And it might just be a strategy to just get in there and then renegotiate the pricing backwards. But it's just kind of.
And that's an important thing for your listing agent. Whoever's selling your home needs to be aware of what offer to accept.
Right.
Because they're going to say, hey.
Because now you're going to get an upset client saying like, well, you told me to choose this one and now you guys are going backwards. Yeah. And who knows, even if you don't come to an agreement, they might back out of it.
Yeah. And that's
because it opens it up.
Exactly.
It opens up the table to renegotiate. So you're not sitting back. Now you got the buyer and the seller fighting for the purchase because you got to go backwards now.
Yeah.
Right.
And the people can just walk and you don't have a deal.
Right.
And there's some appraisal gap that you're going to have to fill in now.
Right.
And then that's.
And are they going to do it or not? You know, that's the question.
Yeah. And then that listing agent, whoever they might be, they need to know that they need to shorten that appraisal contingency.
Right.
Or, you know, almost get it out of the way because, hey, we're not going to be negotiating that price again. We're in contract for this.
Right.
And we've had scenarios recently where the appraisal, because I wasn't too sure about one of the offers. And I was like, okay, we're just going to offer 15 grand over.
Right.
And I checked the comps and it looked decent, but it turned out that there was unpermitted bathrooms, an unpermitted room.
Right.
Like there were a lot of things that came up after the fact. And we go, oh, shoot. Okay. So we had a $15,000 difference discrepancy from the appraisal to the purchase price. And we go, what are we going to do? Luckily, we figured it out and we dropped the price. But my buyer was trying to nickel and dime the seller for repairs.
Right.
And I go, no.
Right.
We got that price down 15
Right.
grand. What do you think about those repair negotiations that you've been seeing? I mean, there's a lot of repairs on, especially those mid-century homes.
Right.
1950, 1960.
Right.
We're seeing things that need to be done. There's a lot of termite, or there's this, there's that, there's something going on, maybe foundation, whatever it might be. But how do you advise your clients on negotiating repairs, because some of them want some really minor things to get done that maybe don't matter?
So it just depends on the market. Again, you know, during COVID, we had a lot of momentum. So people still wanted like, oh, I want this fix or I want that fix or whatever. But you have to like set them back to reality. You know, like take that time. These are conversations that nobody wants to talk about, right? So it's like, are you willing to risk losing this house over a nickel and a dime, or do you really want this property? Because there's other people that are wanting to come in as is or pay extra or whatever, right? Now, if we're in a different market, when the opportunities are there and there's a bunch of properties sitting in the market, I'm gonna tell my client, yes, let's ask for everything and anything, right? Closing costs, repairs, whatever, as long as we throw it out there. Who knows? They might accept it. They might not. But at least we tried, right? Yeah. Right now, I think the market, it's all over the place. You know, there's a lot of uncertainty with the rates, with everything that's going on in the world, to even the prices of the houses. Because I don't know if you guys seen this, but ever since they changed, you know, broker buyer commission, you know, people were still trying to keep properties at a higher price, but not wanting to pay for all this other stuff. So then that's why properties were sitting on the market a little bit longer, and then you started seeing price reductions, and people are like, oh, prices are going down. No, it's just an adjustment, you know? And so obviously, again, going back to how is a property priced, doing our job, you know, doing your comms and whatnot. And if it's something that's safety and hazard, that's important,
Of course.
that's really important to the client, yes, let's
Or
ask
affect
for
the
it.
loan.
Yeah,
Or
affect the loan. Affect the loan especially. You know, I used to be a lender, so I already know what I need to look for, right? The double strap on the water heater, because believe it or not, there's still a lot of agents out there that don't know that. And so we're going to get a reinspection fee. Why would we want to do a reinspection fee and then prolong the loan?
Yeah, it's gonna be another $150, and then nobody wants to pay it. The buyer doesn't want to pay it. The seller doesn't want to pay it.
Nobody wants to pay it.
It wasn't double strapped. It's your house.
Right,
Nah, I'm not paying it.
So that's one of the things that I automatically, when I go, I look at a property and my client wants that property and I write up an offer, I call that listing agent. I'm like, hey, I noticed that the water heater wasn't double strapped. Can you please take care of that? Can you make sure that all the alarms and the carbon monoxide are there? I mean, that's a given. That's in the contract.
That's a state law.
That's a state law. And still people miss that. It's like, no.
Yeah.
I think right now, with where everything's at, properties are going to continue going up. I don't see a dip in the market at all in the future.
No.
And then if the rates continue to slide lower, you're just going to have more buyers in the market.
Right. You know, Nick, you want to talk about that, you know, how the cost of waiting, you know, right now people are waiting to, oh, well, we're going to wait till the rates go down. But now you're competing against others. Plus,
you're going to lose equity. You're going to pay 20, 30 grand more for that property.
right.
Well, you can buy it now, right, Nick?
Yeah, there's a 4.5% appreciation in real estate right now, which
Right.
is pretty average, and that's over the course of the last year. So your cost of waiting is probably another $100,000
Right.
in buying. So it's crazy.
But
if
remember,
you wait for that to go down.
right? And if you can get in now,
You can
that's-
always refinance.
Exactly. But people don't know about
No.
refinance. Like, that's not your that's your fixed payment.
Right.
But you can refinance and get a lower rate, a new loan, the lower rate, and bring down your payment.
Right.
Say maybe $500 to $600. If we get lower rates in the twos, threes again, you're gonna be $1,000 less.
Right.
What
on
do
your
you,
payment.
what do you think if the rates come down to a certain amount? Maybe the people that bought in 2023
Will start selling their property, moving up.
Okay.
Be
Or
more inventory.
refinancing.
Yeah.
But let's say they want to stay in that home. They want to refinance, right?
Right.
Do you think the appreciation in real estate is going to be enough for them to waive their MI at that point?
Yeah, that's going to be a good opportunity too, because the property value goes up, and the people that are existing right now, have bought in the last 3 or 4 years, they'll be able to get rid of the mortgage insurance.
Yeah, and that's going to be
That's going to be an option. This depends where those rates
Right.
land at, because you'd have to go to 3% to be able to get rid of the MI. If you're paying 2.75, then it could make sense. It's just got to be the right mix. you
Yeah, the right mix
But
that-
everybody in the last what's been has been about 2 years, 2.5 years in the 5s and 6s and 7s.
Well, they were at 8 and 9. I saw at one
Yeah.
point. I was like, oh my gosh.
Well, if they never did the quantum easing and they would have just let everything come down to
Right.
what it was supposed to
Right.
be, we're supposed to be right now in reality,
Right.
around 8 or 9%, and then back in the mortgage meltdown days, we should have been probably around 12, 13%, 14%.
I know people are freaking out right now. They're asking me, oh, what's rate right now? I'm like 6.25, give or take. And then they're like, oh, that's high. I'm like, no, that's a great rate.
No, that's a great way. It's just we've been spoiled so.
Yeah.
So people don't understand this. Having rates super low for a long time,
It's
is not,
spoiled.
Yeah, it's not healthy for the
No.
economy either. It's not healthy. That's why we're having this inventory problem.
Right.
But if they were sitting at 5 or 6% of what the rates are going right now,
Right.
people that bought back in 2020, you would see more stuff on the market.
Right. Yeah, because there's a lot of people that are afraid. They don't want to get out of that 2%.
Right.
They don't want to.
Yeah.
They're afraid to okay, if I sell the house, now I'm going to be paying 6 or 7%. And they're like, we'll just stay here where we're at. But on another note, I always tell my clients too, worst case scenario, this is your worst case scenario. It can always get better.
Yeah.
So whatever your payment is right now, if you want to refinance, in a couple years or whatever it is, it can only go down, you know, versus renting, it's constantly going up.
Right.
Yeah. And I heard that, you know, renters, they end up paying close to $300,000 in housing payments.
Right.
Before they decide.
You know, they're buying a house.
I think it's more than that.
Yeah.
You know, renters are also buying a house, right?
Just not theirs.
Exactly.
Exactly.
For somebody else.
Exactly.
That's messed up, man.
It's crazy. I know.
Don't do it.
I have a client who she has multiple rental properties.
Right.
Okay. She did something crazy and I was blown away because I haven't seen this. But she bought her houses, I think probably 2010 is when she bought her first home.
Mm-hmm.
And then she's been buying real estate ever since then, renting it out, doing things like that, right? And she on the north side of Santa Maria, she turned her 3-bed, 2-bath into a 9-bedroom.
Wow. And renting
renting
a room.
No. She's
renting the whole house.
She's renting the whole house. She's rented the whole house. So she's on her like 5th or 6th home. I'm helping her with that one right now. And yeah, she's got 9 bedrooms. And I'm like, I tried sending her a home value estimate. And I'm like, I don't even know what to put. This thing is crazy because the neighborhood's going for like, you know, mid 6s.
Right.
But her house is an outlier. And I'm like, you got a freaking compound in the middle of the city.
That's crazy.
Like, how do you even value something like that?
No, I've seen clients that done, you know, they bought in a 4-bedroom house and they divided it into 2, added 2 rooms. So that's 3, 1 and a 3-1. And then plus an AD. I'm like, oh my God, that's so crazy.
Yeah.
So yeah.
I've seen where they've split the house because it was 2-story. And
they do a one on top of one.
They put the kitchen on top and they cut, and then I've seen them do all that stuff. And then the junior ADU was a corner lot, what made it nice, so they had parking on the side. So that just turned into pretty much a triplex.
Right, that's crazy.
Yeah. What do you think is more valuable? Is it going to be a property that has, like I saw you do an ADU for somebody where the main house was in the back, right? The garage was right here. They converted that into an ADU, and then they attached another ADU in the front on this side. And
I've been seeing that.
Yeah, that was awesome. So that was really cool. But what do you think? Is it more valuable to be doing a joined ADUs or maybe a combination of detached? Like, what do you think?
Well, I think in that case right there, you're talking about that one. That one was because you didn't have enough land in the back to do it, so we had to do it in the front of the yard and attach it. That was the difference. But if you have enough room in the back, then you probably want to do detached because when you attach it to the house, they're going to let you go to 650 square feet. If you do detached, you can go to 750 square feet. So that's the difference.
So you get an extra 100.
Yeah, you get an extra 100 square feet detached, and you might be able to put a fence there, maybe create some more privacy for you that's in the main house.
Right.
So
yeah, I think the detached, me personally, I think it's more valuable. But but I have been seeing those lately a lot in Santa Maria.
And I've seen them
right in front. I'm like, what? You know,
and they've
what's
done
going
upstairs.
on here?
And they've done upstairs over the garage. They put another 750 square feet max up there.
Yeah, I think honestly, like this generation are more aware of what's going on. Like as far as like when we're talking about generational wealth, you know, trying to figure out opportunities because there's a lot of people looking for rentals and there's not many rentals.
Yeah.
The rental market's hot.
And not only that, but they're expensive. So people that are, you know, open-minded, are looking for these opportunities where they can't do generational wealth for ADUs, junior ADUs, or even renting houses, bedrooms individually. You know, like in San Luis Obispo, you know, with the Cal Poly and the college, they're doing room rentals instead of like the whole house. So they get more for their money doing it that way.
Yeah.
Absolutely.
Yeah. And that's those things are really like intricacies in the market that only a professional can really like hone down for you. And one of the things that I discovered was I had a family that was looking for probably like a $1.2 million property, and we were on a journey for like 9 months. It was insane. And we were going house to house every weekend. We were, you know, it started getting to a point where they were like, hey, we don't even want to call you to see this house. Like, we'll just go to open house first.
Right. And then we'll call,
then
they
we'll call
feel
you.
bad. I'm like, no, it's okay. That's my job.
Yeah,
you know?
yeah. But we had a hurdle because the county loan limits, those things are very important for somebody to be aware of. What's your county loan limit in what area? Because San Luis and Santa Barbara are a lot different. And then how is that property zoned? What's the land zoning like? Is it a single family residence, or is it considered a duplex or a triplex or a quadruplex? That increases your
value,
allowable loan on the property. So a lot of the time we were looking at properties that already had maybe a ADU done, or maybe the garage was converted. And so the agent was selling it as a duplex. They were saying, oh, this is a duplex, this is a duplex. Well, you go to title, and then you're in escrow, and you end up finding out, hey, this is not a duplex. And this person can't qualify for the loan now.
Right.
And so those are
and that
things.
is very important. You know, you do loans, R1s, R2, R3, R4s. And then, like you said, the loan limits, you know, now it becomes a jumbo loan. Now it changes everything. So can you explain a little bit on that?
No, absolutely. If you have more units on there and it's an R2 and R3 lot, and they're a true triplex, well, you can qualify instead of, let's say, $750,000. Now you're going to qualify for $900,000 on a regular, you know, Fannie Freddie loan. But if they're not, and they're advertising they're only ADUs, your house is still single family residence. Well, now you only qualify for $700,000.
Right.
That's going to kill your deal.
Oh, yeah.
And you're going to be like, what the heck happened here? You can go up to 4 units. I think 4 units is about $1 million now, depending on your counties too. So you got county limits too. So can't remember them all, but there is county limits. That's very important to keep your eye out for that. And don't confuse your ADU, you know, conversion that they did on that single family house for a duplex, and then you're screwed.
Yeah, no, because they'd have to reassess and go out there and change the zoning, which that's a whole nother case.
That's another, that's a whole nother thing. And then also, like you said, especially here, you know, we are so close to San Luis Obispo and Santa Barbara County. So Santa Maria is Santa Barbara, but the minute you go to Nipomo, it's already San Luis Obispo County. So that's why you need to make sure that you know your limits, your loan amount limits.
I think San Luis County is what, 805, and then Santa Barbara County.
You know,
is
honestly,
760. Well, they're changing it.
They're always changing.
Yeah, they're
759, 900, something like that.
Yeah.
But that's why it's important to talk to a lender so that they can look at your particular scenario.
Absolutely,
you know?
100%. You have to sit with your lender all the time.
Right.
And figure out that's going to be your first guy you want to talk to, and then your real estate agent, or talk to your real estate agent, and he'll get you to a lender. And then we could decipher what you're going to qualify for.
Right.
That's going to be the most important move you want to do.
Right. Anything else you guys want to say? I mean, this is so good. All the information has been amazing. I mean, we can keep talking and talking and talking, but is there anything in particular that you guys would like to tell your followers? How can they reach you? Social media, phone number,
Nick?
Contact info.
You can reach me at 805-345-0562. Working all the Central Coast, so we're not particular to any specific area. But reach me there. My handle is Homes and Loans by Nick Fernandez. I post some pretty good content on there as well. So if you need some value resources, you can hit me there. And I just want to thank Elizabeth for having us on this podcast today, because this is very exciting and very valuable. And also want to thank Gabriel. He's taught me everything I know about real estate. I got to give credit to the man. And also to my sister. She also showed me a lot of things about loans, and she's teaching us all the time. So you want to share your handle?
Yeah. We're pretty simple. I don't know that type of terminology because I guess I'm an old guy here.
Old school.
But
OG. He's an OG.
I'm OG. So, just pick up the phone, give me a call for crying out loud. 805-550-5792. But I do got this modern fix. They call it text. Hey, how about send me a text? Send me a text. Probably be easier than the phone. So just shoot me a text and I'll call you back and just tell me you want to talk to me. Put me down, Gabriel Fernandez, as your contact on your cell phone, and put down there your mortgage guy, and hit me with it.
Just call him.
Just call him.
Just call him.
But you'll see him on Nick's videos and social media. He's out there. giving value to our clients, and also in the commercials. I see him on the commercials, and you can hear him on the radio.
En la radio, I like the
La
way you
ley.
roll your la ley. But,
Or la M, what is it?
La M.
Ah,
La mejor.
La mejor.
Oh,
Okay.
Radio Láser.
La mejor. Wait, Chava Ponce, la mejor. Oh, he's going to get mad. He's going to get it right. Make sure you cut that off.
What? It's been so many. At first, it was like La Ley,
Yeah.
Radio Láser.
Yeah, he's getting chased down.
Yeah.
He's a popular kid.
Oh my God.
But I'm on the radio and I speak Spanish. So if you got mom and dad that prefer talking to somebody in Spanish than in English, we'll pick up the phone
And
give
sit
me a-
down, you know.
Sit down. We'll come
sit
to my
down.
office or I'll go to your house, whatever, and we'll put it together and get you guys calificados.
Do you guys want to close it out with something motivational, inspirational, a tip,
yeah.
anything?
That's this guy's niche.
Just I don't know if you're out there
En
trying to.
español, en inglés, como sea.
Yeah, I'll say it in English. That's fine. If you're out there trying to build a business, I like to see people being successful. So if you're looking at opening your own business or doing your own business, I'm gonna tell you something. Don't ever quit.
Right.
Find a guy that's being more successful in your industry and just copy.
Right.
You can do that and follow. them all
Don't
the time.
reinvent the wheel.
Yeah, don't try to reinvent the wheel. Don't ever quit. You're gonna have to work. You're gonna have to pay a price. So, when are you gonna pay a price? You'll pay it all your whole entire life, or are you gonna pay the price now and go to work? I remember when I started working, I was in my teens, my late teens, and I worked all the way till I was like 32 years old. And I knew what I wanted. I was gonna buy me the big house, all the fancy cars, and have a bunch of kids, and have a pool and a jacuzzi, the whole deal. And I went and got it every single day. And I didn't stop working. I worked 8 in the morning till 8 o'clock at night every single day, 7 days a week. So go pay a price so you're able to lounge around after that and have fun and be talking to these folks all the time. Be a lot easier, but go get it. Go get it. There's nothing stopping you. Go pay the price now.
Yeah. My motivational thing is going to be just if you feel like you're behind in life in general, whether that's buying a house or having the job you want or the career or you're getting schooling, whatever it is, if you feel like you're behind in life, stop comparing yourself. Comparison is the thief of joy.
Right.
And you got to be grateful for what you got. You got to cherish the moments that you have with your loved ones every single day because you never know when the last time is going to be that you're with them.
Amen. And put the hate out of the freaking equation, too.
Yeah.
People are
Stop hating.
family members are haters and
Yeah.
this and that.
Yeah.
You're mad because your sister
It's because
did
you're
something to
shining
you.
bright. That's
Yeah.
why.
Yeah. No, exactly. You got
And you're
hate.
like, oh.
Yeah. No, exactly. Because you're. That's another thing is being positive. That's a simple thing. Is that I learned a long time ago.
Kill them with kindness.
Most of us are a bunch of negatives. XXX. Be positive, man. Why don't you just be positive?
Right.
And problems are gifts from God, and you'll find what's good in those problems all the time. So, so take those problems.
Yeah. And I think the biggest thing too is, being grateful for what you have and stop. If we talk about social media all the time, right? But please get off the social media.
Right.
If the first thing you do is wake up, look at someone's story and you see that realtor, you see that person, and you're jealous and you're angry and that's poison to your life.
Right.
Get on there to inspire people.
Right.
Get on there to make moves and do great things and influence somebody, and go out there and have some really valuable conversations like we're having today.
Right.
Go talk to more people.
Right.
Go hang out, get the ego out of the way, and just gotta love one another.
Hey, do people still go out and talk to like a human being, like face to face?
Yes, we're right here, right now.
Well, I know that. I know, but when you're trying to market,
That's one of the things that honestly,
like if you're trying to be a real estate agent or a
right,
loan officer or whatever you're selling,
right.
what
That's
happened
why
to those days?
I don't know. I keep saying, I keep telling everyone, I'm like, hey, you guys cannot be a secret agent, because if you're a secret agent, nobody knows who you are, what you're doing, or anything. It's getting out there, networking, getting involved in the community, participating, Obviously, you don't follow me on social media. I'm out there. I'm a social butterfly.
Nice. What we're gonna do? I'm doing all that stuff. I'm just not used to it.
But you're right. You're right. There's not a lot of people out there. A lot of people don't want to do open houses because they're afraid to talk to people. But then that's our job.
Well, that's your business. You're supposed to.
We're providing a service.
There's an old book I read. It's called by Dale Carnegie called How to
Win Friends and Influence People.
Yeah. Great
book.
Great book. Or
Read it, guys. Read it.
Oh, it's 100%. It shows you how to be charismatic. It tells you how to be friends with everybody, and you want to master that.
That's why we're good friends.
Yeah. Absolutely. And then become, another one? Become a better version of yourself every single year.
Right.
Become a better version. Learn something new.
Yeah. Right.
If it's spiritual, if it's, business or whatever, learn something.
Right. Even every day. I mean, a little piece of grain every day. Yeah. Looking back, you're like, whoa, like even when, like say we're going to start working out, even if you're just hiking one day and then hiking the next day and then you start seeing results. You might not see it right away, but looking backwards, you're like, whoa, it did make a change.
Yeah, you did. You evolved. And that's what you want to do, change it up, every single time. And something good,
Right. Well, thank you guys. So everyone, please reach out to Gabriel or Nick if you guys have any questions and concerns.
Or Elizabeth.
Yeah. But let me know if you guys want them to come back. If there's anything specific that you guys want them to talk about, we would love for them to come back and share more info.
We'll come back, for sure. I had fun. And then what about that beautiful house you got for sale?
Yeah, tomorrow it's gonna be. We're gonna do a Twilight open house. We're also gonna be doing another open house probably July 9th. And Miguel.
But the one tomorrow is huge.
Yeah, tomorrow is from 5:30 to 8. Okay. Well, technically until
I'm gonna go
whenever.
Support you on that.
For sure.
Beautiful castle. I call it the castle.
Yeah,
right?
the castle.
It's beautiful. It's unique, and then it's for the.
Oh my God! Yeah, you guys have to go check it out.
It's something else. You have to go check it out. I've just looked at the pictures. I haven't looked at it in real life, but I'm sure
that's what you're gonna do tomorrow.
That's what I'm gonna go check it out in person, and we're excited. You're gonna have some drinks out there.
Yeah, we're gonna have drinks, food. We're gonna have some 4th of July decorations and stuff like that to kind of kick off 4th of July.
Yeah. And this is in what town again? Is it in
Los Osos, 2743 Rodman Drive in Los Osos.
And you're gonna be able to look out in the beach. Yeah,
every room you can see Morro Rock. Yeah,
wow, that's huge, folks. That is huge.
Yeah. There's a sauna. There's a jacuzzi. Oh no, sorry, not the jacuzzi.
How many square feet?
They took it out. It's over 5,000 square feet.
Wow, that's a castle.
4
and
stories.
We see those pictures. It's pretty. She showed it to me probably about 2 weeks ago. To get just a picture before it even came on the market. I was blown away. That's something else. That house.
Can I bring my own wine?
Yes, you can do. Yeah, you can bring whatever you want.
Yeah, we'll bring our own wine.
Yeah, I'm gonna have my rosé, and then we have some other
sandwiches.
There you go.
Now bring some dashboard burritos, man. Come on.
From the old dashboard burritos. Dashboard burritos.
Well, thank you guys again. I had a blast.
I had so much fun. Thank you so much. Thanks for having us.
Yeah, of course.